Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Josh Riley, co-founder and managing director of Upfort, Jennifer Wilson, head of cyber at Newfront, and Jason Rebholz, he's vice president and cyber risk officer at Travelers. We're here to discuss cyber risk management, mitigation, response, and insurance. It is great to have everyone with us. Thanks for joining us on Trade Talks. I'm going to kick it off with you, Josh. Give us an overview of the most challenging trends that you're seeing within the cyberspace right now.
Well, really, there's an opportunity for everybody to grow in cyber insurance, and a lot of that centers around small business. And the challenge is always with that is you've got to find really low friction, easy ways to engage with people and do so without sacrificing underwriting rigor, I think. So the easiest way to give somebody an easy process to buy insurance is to lower the threshold of information that you need and the time it takes you to evaluate something. But that's obviously not the best case for an insurance company for their bottom line. So we see the biggest challenge is trying to find a way to combine ease of access with still being rigorous and being responsible, building a sustainable, a profitable cyber insurance book.
Yeah, and Jennifer, that's what's so interesting about this space because it is complex. It is constantly evolving. It's like you're almost playing 4D chess with all of those pieces. So give us your overview of where we are right now.
That's right. I like to say that the only constant about cyber is the fact that it's constantly changing. And that holds true with respect to carrier appetite and capacity, to coverage options, and to the risk itself. It's constantly evolving from, we saw data breach to ransomware, and now we're seeing AI leveraging phenomenal change in the industry.
Yeah, because the good guys and the bad guys are accessing, the same time of emerging technologies. Jason, you noted that we're at the highest rate of ransomware incidents at this point in time. Why is that? Is the industry not catching up quickly? Is it something because of all these emerging technologies that are now part of the equation?
Yeah, we're really seeing a perfect storm of everything from attackers really finding better ways to try to hack into companies, and companies just not being prepared to how to handle that and how to properly defend themselves. And so when we look at the numbers of victims of ransomware, we can see that last year, over 5,200 victims. That's a 15% increase from the prior year. And so this is a trend we've been observing over the last 2 to 3 years where it keeps getting worse. And even though we know the right defenses, it's still really difficult for companies to properly implement them and really get in a position where they can actively defend themselves every day.
Right. That's a perfect segue for Josh, because Josh, you had mentioned small and medium-sized businesses. And when you're thinking about your strategy, it's not a one-size-fits-all solution when you're thinking about the size of the enterprise, the industry that they're in, what their risk priorities are. What are some of those subtle differences when you think about it through the lens of a smaller business with the accessibility that they have relative to a larger enterprise?
Yeah, really the constraints are in terms of time resources and financial resources. And also there's a little bit of what happened, cybersecurity solutions have evolved in a way separate from that SME market because it just hasn't been a very attractive or accessible market for cybersecurity companies. So not surprisingly, they haven't developed things with that particular group in mind. But luckily, there's a lot of incentive for companies, including insurance companies, to meet that demand. What's a really nice sort of rhyming incentive pattern that we can take advantage of is that insurance companies would love to build a higher value product that includes services. They'd also love if that higher value they add to their policy mitigates their loss ratio. That's all great wins for everybody. And I think there's a real opportunity to do that. The great thing about SMEs is that in a way, we're in sort of like seatbelts territory with it, right? You go to them and there are priorities. And as Jason would point out, there's depends on the company, depends on your industry and everything. But some of it's 0 to 1 territory, right? Some of it is we just need you to do something rather than nothing in this area. And there's a lot of opportunity to do that.
See, which is interesting, and I'm glad you brought that up in terms of how how an insurance company approaches it, because my first thought would be smaller businesses would be more vulnerable since their defensive aren't as extensive as larger enterprise. So, Jason, if you could follow up on that a bit and explain, I would think, law firms or schools or smaller businesses would be the ones that are most vulnerable, knowing the attackers, knowing that they don't necessarily have the same defenses at like a company like Travelers, a larger company.
Yeah, I think it's important to know that attackers don't necessarily care who they're attacking. They're just looking at it as, I want to try to get as much money out of the company as possible. And so for that reason, larger companies might be a more attractive target, but there are just so many more smaller companies that are available. And you do see that some of the security can lax because they're not playing with the same budget as some of these larger companies that are out there. And so that's where it really comes down to smaller companies have to focus on the fundamentals. They don't need to go buy a Ferrari of security technology when they really just need to focus on, the good old fashioned security technologies that will get them into a good spot. And it won't be perfect, but that's why cyber insurance exists. We're there to help when something does go wrong.
Right. So let's take a step back for a moment here, Jennifer, when we think about cyber insurance. And just to clarify, if you have a cyber incident, that's not part of your other lines of commercial insurance. This is specific to that, right?
That's right. And cyber is so different from any other line of commercial insurance. Take property, for example. Property for centuries is the same thing. The risk stays stagnant. It's fire, flood, wind, hail, theft, etc. Never changes. Cyber is constantly evolving from data breach to ransomware and AI to cybercrime. There's a constant change and flux in the industry. What's interesting, just to pivot on what Jason and Josh were talking about, how cybersecurity is evolving along with the risk. The insurance industry hasn't quite evolved with the risk. We currently do not have affirmative AI coverage in insurance policies right now, and that's an area that we're trying to focus on to ensure that our clients are properly protected, making sure that the insurance policies are written to cover the risks as they continue to evolve.
Right. So, Josh, let's take that a step further. We know that emerging technologies such as AI, it's starting to impact the cyberspace. To Jennifer's point, what will that mean when it comes to underwriting and being able to establish a value? Because it kind of is a bit arbitrary when you're thinking about, okay, what's the intangible worth of a company dealing with a cyber incident? If revenue, product lines are down, the intangible reputational risk, how is that going to impact underwriting?
Yeah, unfortunately, there's really no easy answer to that. I think that what it means is that you need to be flexible and adaptable. The bar is sort of raising on insurance companies as far as like how they're able to underwrite. This probably goes beyond cyber as well, right? But cyber is seemingly a really good example of the need for innovation pretty much across the board. But in cyber, it just shows up really obviously, right? And so in cyber, how do you have a fast, functional, streamlined, but also adaptable underwriting system? And I think that responding to the concerns of the customers in a prompt manner, as Jennifer said, but also being able to do it in a rigorous way, in a way that's responsible in terms of underwriting, is really going to end up being the new bar for underwriting organizations. You just won't be able to do this without that. So I think as the cyber insurance market continues to mature, it's just going to require that increased level of adaptability. And then it's also going to require that you're good at that in order to participate, which maybe hasn't always been the case.
Jason, let's take that a step further, because as the tech stack continues to grow, whether it's AI, whether an organization starting to think about their quantum strategies, migrating to the cloud, having some sort of hybrid version of cloud and in-house, the more vendors you add on, the bigger your tech stack gets. Now you have to start worrying about vulnerabilities that exist with those partners within your framework. How are organizations thinking about that when they're measuring their risk and thinking about mitigation strategies?
I think that's a challenge, is that there's a lot of companies that aren't thinking deep enough on the risk that it poses. If we look to last year, you had hundreds of millions of Americans whose health information was lost because of a third-party data breach. You had auto dealers whose systems went offline because of a dealer software that was hit with ransomware. And so this is really a wake-up call that it's not enough to manage your own security. You really have to understand what is the security of your third-party vendors and how does it tie into your systems? Because the state of today is that your business relies on other vendors to run. And if they go down and your business goes down with them, it doesn't matter. You're the one that's left holding the bag at the end of the day.
Yeah. And Josh, let's pivot that to the consumer for a moment here, because right now I'm operating on Zoom. I depend on Verizon for this whole internet thing to happen. I have a Dell computer, an Apple computer, and a whole bunch of other systems for work that I can't even quantify. I'm kind of out there. I wouldn't know how to respond as a person. What should businesses be doing when they think about protecting their consumers?
Yeah, it's a really interesting sort of concept, actually, because it really mirrors what Jason was just saying about how companies think about their network of third-party vendors, right? I mean, we all have to start doing a better job of understanding in a broader way what our networks are, what's included in my network. And that's true for a business, for a government entity or a school district. I mean, we just saw Power School as well as an enormous story right now, and then it extends to on a personal level, right? And then even if you think about the connection between a business and its employees, a lot of people working from home or using a laptop, that is part of your company network now. How are you managing that, right? And so some of us are maybe used to working in large businesses, so we hear the story of the IT people telling us about what we need to be careful about. Not every business has even that level of guidance. So what are even your base level of, what's your advice to your employees, but also do you provide them with any tooling or resources that extends to how they're working at home? So the personal cybersecurity of your employees or of people is relevant to more than just an individual person. It might be relevant to your business, might be relevant to your entire community.
Yeah.
And
And Jennifer,
Jill,
oh, I'm sorry, go ahead.
yeah, just to add to that, another thing that businesses have to look at is their own business practices. Jason was talking about third-party liability claims. Part of that onslaught of claims included pixel tracking. And a lot of our companies, when they're faced with underwriting questions, they're saying, no, we don't use pixel tracking. And lo and behold, they get a pixel tracking claim. And it turns out while the IT team wasn't implementing pixel tracking, the PR company, the marketing department in the company was implementing tracking coding. And so the company didn't even know what different departments were utilizing, so they weren't even sure what their risk actually was. So I think it's making companies look at a broad range of departments to understand what the risk is.
And Jennifer, you kind of read my mind because that was a question I was going to go with. And we cover cyber extensively. It's a core part of our coverage here. And a consistent theme that we hear is it's not just that we want our organization to remove itself from operating in silos. Not only does it hinder marketing, communications, and sales opportunities between the different organizations, but from a risk perspective, if you can't get that bird's eye view, in today's day and age of emerging technologies, how they're being deployed for good and bad reasons, this really does make the case of why risk management cannot operate in a siloed environment.
I completely agree. It's a bird's eye view because it's not just about the cybersecurity. It's not just about risk management. It's about, what is your breach response plan? Are you in compliance with regulatory requirements? Are you up to date on the SEC disclosure requirements? Have you interviewed your privacy counsel in advance? Do you know what you're going to do in the event of a claim? So it's all encompassing and it involves many different aspects of the business.
Yeah, and I'm sure, Jason, from your point of view, all of the data and what you're learning from cyber incidences through the cyber insurance business is only going to help as you develop new products and understand how to mitigate and respond to these incidents in a more effective way. And if you think about it from this perspective, and to you and Jennifer's point about the insurance industry being slower to deploy it, if you think about, AI technologies, they're about predicting, right? So you're predicting your vulnerabilities, you're mitigating, and in theory, your response should be more effective and more timely.
Yeah, the beauty of the insurance industry is that, one, we have a dual win scenario that we're trying to go with. When our policyholders don't have a claim, then there's no financial payment that has to go out there. And so the benefit there is that as we collect data, we have all of the financial information on the cost of these attacks, and we can actually calculate out to see how costly is an attack going to be. Or, if you don't have certain security technologies, how much more likely are you to have an incident? And what could that cost differential be? And so the benefit there is that when you partner up closer with your cyber insurance carrier, you're in a position where you can better understand what happens if you don't have the right technologies in place. And that bridges the gap between the security teams and the CFO so they can really get to more dollars and cents to make a more educated decision.
Yeah. Josh, I think you and I have covered this before, how you're starting to see the CISO role or security leadership, how they're working more within the CFO function because of the risk management role that they're taking on, even more so than thinking about the actual, technology that's being deployed. I think it's really interesting to see how the evolution has taken certainly over the past, 3 to 5 years, let's call it.
Yeah, I mean, it's a shift in probably roles and leadership, but also just collaboration. I mean, with what Jason said, I mean, one of the really interesting points that comes out of that is the more, again, it's a very convenient aligned incentive. The more you are sort of knowledgeable and involved in the actual risk mitigation strategies, the more granular your understanding of that data comes from that, right? So if you're operating a business, you need to be involved in that. It's relevant, it's important. If you're an insurance company covering a business, the more involved and helpful you can become in helping them mitigate that risk, the more granular your understanding will be about what types of things matter. So yeah, we need to get more people involved because there's incentive for everybody. But to your point, Jill, it definitely has become more of a broader the CISO has become more of a genuine part of the C-suite, right? Because people have started to understand that cyber risk is business risk, right? And I think the way that people need to understand that is as your premises kind of moves from your physical storefront to your online storefront, well, let's shift as well our sort of how we weight the importance we give to certain things. And the online presence, the networked presence of our business is a huge part of what we do. So that needs to be a big part of the top line discussion.
Yeah, it certainly does. Jennifer, I'm going to ask you this, and Jason, if you don't mind following up as we wrap this up. Jennifer, do you think there is some concern? This is kind of putting on your cyber hat a little bit, with the rush in such competitive environments to deploy an AI platform product, whether it's internal or externally facing. Are we thinking about the risk and what that opens us up to versus, okay, what's the ROI? How can I make sure that I have AI in my story and a product out there, right? I'm always concerned that the equation might not necessarily be equal on both sides.
Yeah, I think everybody's considering that and concerned about that. And I think that not to be looking forward at how the risk is going to evolve and how it's going to impact not just the company as a whole, but looking at it, how it's going to impact the nation. I think we'd be remiss if we're not considering all aspects.
It's a great point that you bringing up to the national level. And Jason, to wrap up for us, I'd like to get your perspective on that.
Yeah, with the evolution of AI and what it's going to do to cyber attacks, it really comes down to speed. We're going to see a lot of automation. We're going to just see a lower barrier to entry for attackers. And so for companies that need to defend themselves, it really comes down to you have to get on top of your security program. You have to position yourself where you're patching vulnerabilities quickly, because as automation falls in the favor of attackers, defenders are left trying to race to catch up.
Yeah. All right. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much, Jill.
Yeah.